futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Welcome back. We spend a lot of time talking here about the tech stocks and the AI trade, but the big winners this year are actually mining stocks. For example, Hecla Mining is up nearly 250%. Newmont is up 170%. The gold miners ETF is up 150%. Southern Copper is up 64%. What is driving these moves? And more importantly, are they sustainable? Well, metals are soaring. Silver and gold are on pace for their best year since 1979. Copper is on pace for its best year since 2009. So let's drill down on these trades, starting with copper, and see what 2026 might hold. Phil Streible is the chief market strategist at Blue Line. Phil, I need to eat a little crow here. I can't remember who I was discussing this with at the beginning of the year, and I said, even if the commodities perform well, the stocks often don't. They can be very cyclical. They go up and then they go down, and they're not necessarily always the best stewards of capital. Well, what a year it's been. Does it continue?
It really looks like it is. I mean, the underlying drivers for these different commodities to keep going up are there, and they're set in stone. You look at copper and silver, their prices are rising due to tighter supplies from mining disruption, surging demand from the green energy transition, and the building of and running of those AI data centers. So it's the surging demand, the global shift towards electrification, and that includes the growth of EV vehicles, renewable energy products, wind and solar. It's really driving that record consumption and demand for copper, silver, and green energy.
I want to switch gears to silver now because it's a little weird, but it was pointed out by Andy Brenner, so I'm just stealing his data, by the way, that silver per ounce now costs more than a barrel of oil. It obviously happened back in 2020 when oil went negative, but to the broader idea, it normally does not happen. We're showing a chart right now, Phil, you can see it. What do you make of silver's run, and do you see any slowdown to silver because it has outperformed most of the stock market this year?
Yeah, Brian, you couldn't have two different products going in complete polar opposites. And the spread differential is really driven by the changing dynamics and the growing fundamental uses of silver versus crude oil. You've got that physical scarcity. You know, the market is experiencing growing like a global scramble to get physical silver. You've got 5 consecutive years of supply deficits leading to those tighter inventories across major exchanges like London and Shanghai. You also have individual investors that are becoming more savvy in a sense. They're realizing that allocating small slices of their portfolios towards these growing themes with the commodities behind it have really helped structurally support prices. But back to the oil, the fundamentals are the opposite. You've got production surges. You've got oversupply, not only from OPEC plus, but from shale at record highs, the growing supply glut. I mean, the amount of oil that's just floating around in storage right now is unbelievable. So look at the chart pattern on oil year to date, look at the chart pattern of silver year to date. And it's like looking in a mirror with the opposites.
It seems like, and again, with oil, it could turn on a dime. I know some people might question all the data around floating storage, et cetera, et cetera. But from a chart perspective, Phil, do you think it's possible, or I should say probable, because anything is technically possible, that oil will fall into the $40 range and fairly soon?
I think it's already written in stone. I mean, you look at the administration's mandates, they're really trying to bring inflation down. The easiest way to do it is by lowering energy costs. We're just becoming more and more efficient using electrification for things. I mean, people don't even buy gas or oil and anything in your yard. Your lawnmower isn't even run on gas anymore. And you look at electric vehicles, they don't even use oil at all. So it's the demand for oil is just not there anymore. And that's where you look at these AI centers, these data centers, they're using things like copper to turn a turbine through electrification in order to create that energy. So it's just been a complete shift and a changing dynamic of where things are at. And it's possible we even see triple-digit silver at some point in the future.
Wow.
The Burr Lives trade, gold and silver, or silver and...
Just in time.
I inverted it. Phil Streible, appreciate it. Thank you.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition. All information, communications, publications, and reports, including this specific material, used and distributed by Blue Line Futures LLC shall be construed as or in the nature of a solicitation for entering into a futures transaction. Blue Line Futures LLC does not employ research analysts or maintain a research department as defined in CFTC Regulation 1.71.